Hello, everyone, and thank you very much for joining us today. My name is Alina Islam, and I'm a mining analyst here at Red Cloud Securities. I'm very excited to present Jindalee Lithium to you. They are advancing the McDermott Lithium Clay Project in Oregon. To give you an overview of the company, as well as discuss upcoming plans, we have with us Rodger, CEO. Once Ian's presentation is over, we will conclude with a Q&A session. So please put your questions into the chat box and we'll get through as many as we can at the end. Before we get started, I do need to mention the fine print. For Jindalee Lithium, there may be some forward-looking statements made on this webinar. Please read the cautionary note on page 2 of the Jindalee Lithium corporate presentation located on the company's website. For Red Cloud Securities, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. We note that this webinar does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Jindalee Lithium specific disclosures. And with that, I'll hand it over to you, Ian. Please take it away.
Thanks, Alina, and good afternoon, everyone, and thanks for joining. As Alina said, my name's Ian Rodger. I'm CEO of Jindalee Lithium. Jindalee is a pure play US lithium company focused on developing our McDermott project, which is one of the largest lithium deposits in the US. And I guess we're here to discuss and run you through why McDermott is a sort of strategic and generational asset and why you should be interested to learn more. So with that, I'll walk through our corporate presentation. I'll skip over this, given we've covered that. So why Jindalee? Jindalee's McDermott is a globally significant resource. It's 21.5 million tonnes of lithium carbonate equivalent. It's, like I said, it's one of the largest in the US, and it's sort of strategically located adjacent to Thacker Pass project owned by Lithium Americas in the McDermott caldera on the border of Oregon and Nevada. We've just recently completed a pre-feasibility study, which confirms towards the end of last year, November, which confirmed a large-scale, long life and low-cost source of American-made battery-grade lithium carbonate production. We're very well strategically positioned and aligned with US policy on critical minerals and energy security. In particular, we're located on federal land, which is positive in the context of proposed permitting reform from the new administration. Last year, we executed an agreement with the Department of Energy in relation to cooperative research and development, and I'll speak to that a little bit later. And we've got a Department of Defense grant application afoot, which could potentially fund the next stage of work, including a feasibility study. So we had good, strong government engagement. And in summary, we have a highly strategic asset. We'll walk through it in a second, but we're incredibly cheap, even on a relative basis. And I'll show you the data to support that. And we're well capitalized for the 2025 work program ahead of us with a number of material catalysts in the pipeline that I'll step through. Before we get into the details of McDermott, the following two slides really just give a bit more context on Jindalee. We're really unusual for a junior mining company. We've been listed for 22 years. For 18 of those years, we didn't raise any equity. And that was because we created shareholder value through exploration success, JVing and selling assets. In particular, we had a large success with a proportional takeover of a uranium deposit to a Chinese entity in Australia. So we've got really a track record of being prudent managers of capital. Got a very tight capital structure with 74 odd million shares on issue, and that hasn't. We haven't done a consolidation or anything. That's just what it's been, and a result of the fact we haven't raised that much capital. We're supported by largely a high net worth investor base out of Australia. Lindsay Dudfield owns 24%. He's a founder and director of the company. So on top of that, board management also own a chunk of the company. So we're very well aligned with owners. The top 20 holds 70% of the stock. So we've got a very loyal supporter base that's supported us through the current down market in the lithium space. On this slide, I spoke to it earlier around that we're cheap, and I think every lithium company clearly says that they're cheap at the moment, and I'd agree with them. But from our point of view, we're even cheap on a relative basis. The irony is that McDermott is one of the most advanced lithium sedimentary projects in the US. It's one of 4 with a reserve, which you can see on the right hand side slide there. I've included our more advanced peers in Lithium Americas and Ioneer. Clearly, they're much closer to production than we are, but that really shows the trajectory in terms of the multiples. But on the left, in the middle of those multiple resource multiple curves, those companies, similar stage projects, lithium clay deposits for trade multiples higher than we are. The differentiator is they've got a North American listing, and we've got a limited profile in North America, which is, I guess, why we're here today to tell the story. Just quickly on the team, myself and Wayne Zeklich joined the board about a year ago as a part of our transition from explorer into developer. My background is I'm a mining engineer who cut my teeth at Rio Tinto across a number of large mining greenfield project builds before transitioning into corporate finance and investment banking. And I was previously had a senior projects role at a company called Oz Minerals prior to the takeout from BHP for circa 10 million Australian dollars. Wayne Zeklich is our new chair. He brings a large financing background, CFO, Rothschilds, investment banking background. Lindsay Dudfield, I touched on, is our founder, long track record in exploration success and is a steward of capital. Paul Brown's one of the few people with deep operational experience in the lithium space, running one of Australia's largest lithium businesses, CEO of Mineral Resources lithium business, and now runs Core Lithium. And then Darren is a seasoned corporate lawyer with, again, deep experience in the lithium space through Near Metals. Brett is our key operative in the US, running operations over there. He's got a long track record across multiple projects through the life cycle, and has been really key to driving our activities on the ground with various stakeholders. In terms of the high level metrics for McDermott, the PFS outlines a very long life, 63-year project life with a 47.5 thousand tonne a year of battery grade lithium carbonate production capacity, and we meet that in the first 10 years, and then the production over the first 40-year averages above 40,000 tonnes a year of lithium carbonate. It's a very low cost operation. It's in the bottom half of the global cost curve, highly competitive with North American peers. And I should point out that it only uses about 15% of the resource base, so there's lots of optionality to expand this further, but it's already a giant asset. The return profiles on the project in a lot of ways look like a copper porphyry project. Significant capital investment, but very high margin annuity like cash flows, which is very attractive to both customers and large strategic players. And how do you unlock big capital projects like copper porphyries or large oil and gas assets? That's through partnerships and joint ventures, and increasingly this is the way forward in the lithium space again, which is something I'll chat to a bit later. And clearly this is part of our strategy, bringing on the right partner or partners in the pre-development phase to set us up for success and be able to take this project forward into construction in a number of years time. The last 2 points I really wanted to highlight on this slide is that it's a really the PFS is a really high quality piece of work. The lead engineer on this was Fluor Corporation. They're one of the largest US based engineering and construction companies, and that was done quite deliberately. We wanted something that was done to a high quality standard to withstand the due diligence of potential partners, but also Fluor are one of the few groups with deep experience in the lithium sedimentary or clay deposits. They're the lead engineer at Ioneer, for example. and we've been really impressed with the work they've been able to do, and we think there's lots of opportunity to improve that further. And that's really the second point I wanted to make here, is that we manage the PFS on a relatively tight budget in a down market with limited time and effort, dedicated to optimizations. We really leveraged the Fluor experience on a set of parameters. We ran test work from all the way through to battery grade lithium carbonate. So we've learned a lot of things and identified a lot of opportunities, some of which I'll touch on when I walk through the project. But we haven't really been able to do the test work to be able to bring them into the financial metrics yet. So we see material opportunities from both OPEX and CAPEX improvement, even on these compelling numbers. I'll now step through a bit of our verify fly through to give you a better feel for the project. As I mentioned, located on the border of Oregon and Nevada in the United States. This picture really just demonstrates how well we're serviced by infrastructure. First of all, the red oval is the McDermott caldera, which is the geological feature, essentially the top of an old volcano with Thacker Pass down one end, about 30 k's away from our project in the north. Both projects are sort of similar in style and scale. But in terms of infrastructure, the power runs just adjacent to the caldera there. You see near the town of McDermott. We're serviced by a major highway, as well as a rail line into Winnemucca in the south. So very well situated. These are our claims. I should mention, the claims do. It's not quite clear on this picture here, but roughly that line through there is a state boundary. Our claims do straddle the border, but all our resource and drilling done to date is on the Oregon side. And you can see that the indicated resource there takes up about half of the resource area, given our drill spacing to date. Now, just to give you a bit of a feel for the caldera, I'll spin you around here. We're close to the town of McDermott, which is a former mercury mining town. But you can see from this picture here the rough edge of the caldera, and Lithium Americas is located with Thacker Pass, roughly down there. Just to give you some context, I mentioned mercury mining. I like to show people this. Some of the imagery of the landscape up there, because it's not what people expect. You can see from this, abandoned mine that's currently monitored and run by the EPA. It's adjacent to our claims. Our claims are on this side of it, but the region has about half a dozen or so of these mercury mines that have been abandoned. These are the waste piles, but there's also sort of abandoned mining workings further behind where the picture is taken from, and you can tell there's obviously been some degradation in the region from this mining in the middle of last century. Just lastly on the topography, I just wanted to show you what the vegetation and stuff looks like. This is largely sage brush vegetation here. It's been heavily cattle grazed. So just to give you a feel of what it looks like. Now, in terms of the PFS, it consists of a shallow open cut mining operation with a two-staged processing, being a beneficiation and a chemical plant. In terms of the mining, I'll go on to the next slide to give a bit more detail, but there's a section on the next page which is roughly through the pit this way. But the mining, this cross section is a 3 times exaggerated, vertically exaggerated cross section, just to give you a feel for that. Very low cost mining operation, very low strip, all from surface, free dig material with a bond index of single digits. So it's really unconsolidated material. These deposits form through sediments on the bottom of a previous caldera lake. So very soft, almost unconsolidated material that comes apart very easily, even on the processing side. So The mining cost is a relatively small part of the operating cost. It's about circa 15% of the unit OPEX over the life of mine. And, you know, the strip ratio is circa 1.3 over the life of mine. I should note that that's targeting only 2 out of the 4 units of the resource base. We've really targeted the higher grade and zones that perform the best metallurgically. Like I mentioned, that's one of the key areas of potential optimization. You know, doing more work to bring those in. They're all economic, but when you've got such a large project and such low mining costs relative to the unit cost, it's not sensitive. And in fact, you know, the pit optimization work, you know, the pit didn't really optimize. It wanted to make a much larger pit, but it's a law of sort of diminishing returns from a cash flow analysis point of view. Having a pit with 100+ year life doesn't really make sense. So we've cut it at 63 years at this point in time, but there's potential to shape that based on value and optionality going forward. I should say that we target providing the mill with about 2,000 ppm plus lithium material for the first 40 odd years. And if you look on this slide here, these are the near surface 2,000 ppm blocks, which demonstrate you know, that there's still we think we can add more to this. Essentially, there's gaps in our modeling, and partly, you know, that is because of, you know, the drilling. So there's gaps here, there's gaps here, and there's gaps down here, for example. The net takeaway is we think that we can, you know, add materially to the 2,000 ppm material, and then, you know, therefore, you know, extend that production profile within, you know, or within the existing pit, let alone expanding it to the broader resource, or potentially, I should say, expanding it to the broader resource. Now, in terms of the processing, there's 2 key stages, as I mentioned. The first one being the beneficiation. Essentially, this is washing the material to screen off the coarse gangue. That removes in the order of 25 to 30% of the overall mass of the ore, leaving 92% of lithium in the fine fragment to go to the leach feed. This is a really crucial step in the process, because, you know, the processing is in the order of 70% of the processing cost, or a bit higher actually, and any acid consumers that report to the downstream chemical plant obviously increase OPEX, and also, you know, the size of the facility is designed on a certain level of mass rejection. So the more we can reject of particularly those acid consumers means a smaller plant per ton of lithium production. So that means lower capex, also means lower consumable use in terms of acid, which I'll step through in a second, which means lower OPEX. And so we've recognized a bunch of opportunities in this space. We've got solid results from our test work, but we think there's material avenues to improve this. Now, in terms of the downstream processing, it's a sulfuric acid leach, atmospheric. As part of the capex number, it includes a acid plant which generates, you know, circa 80% of the site's electricity needs and delivers sulfuric acid to the process plant. Once the metals are in, once the lithium is brought into solution along with other metals, some of the big cost elements is to remove the other metals that aren't required. There's potential byproducts, probably the biggest one being magnesium sulfate, which is a Epsom salts, which is a low value agricultural product. We've not assumed any revenues associated with that at this point in time, but there's potential that could offset some cost. And there's other elements that we haven't really spoken a lot about, but as part of the focus of our cooperative research and development agreement with the Department of Energy, we're looking at potential byproducts and co-products. They're also helping look at avenues to improve beneficiation, as well as other innovative ways to reduce costs and improve sustainability outcomes at McDermott. Now, the back end of the process flow sheet looks pretty similar to traditional spodumene route to refining and producing battery grade lithium chemicals in terms of crystallization, ion exchange, etc. But from a spodumene comparison point of view, I really like to make the point that it's less energy intense and less complicated than the overall spodumene route to chemicals. For example, there's no fine grind, there's no flotation, there's no calcining. So, like I said, in a lot of ways, yeah, it's a more straightforward flow sheet than the spodumene route to chemicals. Moving on to the market now. Clearly, we're peak bearish sentiment in the lithium market on the face of a temporary oversupply, and we've been in this situation before. And we've got this situation where about half the industry is losing money on a free cash flow basis, yet demand remains really robust. Clearly, anyone who's been around commodities before knows this recipe is unsustainable. And the chart on the right really just tells this story in a simple way. Between in the 4 years to 2023, the price averaged $30 a kilo. We added about 500,000 tons a year lithium carbonate. From the 4 years from 2024 ahead, on a relatively conservative demand basis, we're expected to add another 1 million tons, but the price is $12. Clearly, that's just not going to happen. The price will need to be materially higher, and that surplus will get worked through as projects continually get delayed. And if history is a guide, timing will capture most people off guard. When the market started to turn in 2023 or come off, there was analysts, or the consensus view was that the deficit's at 2030. Last year, the sort of consensus view was that shortened to 2028. Now we're getting some analysts say it's 2026. It's $1 million question. And I think, as I said, history is a guide that it'll catch people off time, particularly in the lithium market, where a lot of the inventories and other things are not well understood. But what we're seeing, I should say, actually credit to SC Insights for that the analysis there. And the other key point I wanted to make on this slide was that major players are already recognizing, and this is the bottom of the market, by securing supply through joint ventures and partnerships, etc. And really, this is the right time to position for the next up cycle when the whole industry is basically on sale. And really, this slide just puts a bit of data behind some of those statements. We've seen obviously Rio Tinto and Albemarle, and then Pilbara Minerals and Latin in terms of some of the bigger deals. But right next door to us, Lithium Americas have continued to build upon their relationship with Lithium Americas, which was started a couple of years ago, but then expanded into a joint venture last year, at the tail end of last year, into a joint venture. And they increased their commitments by a couple $100 million up to $945 million US to largely fund the equity portion of their project, alongside a recently announced mezzanine financing facility with Orion Partners in the order of $250 million, plus a very good terms through the Department of Energy loan program office to finance 75% of their capital. But for us, we're really focused on the bottom right hand side of this slide, really the pre-development funding, and increasingly we're seeing strategic players get involved in the pre-development phase to fund PFS, shape the end result, and plug these projects in to the downstream battery market, which is really needed to build a credible North American market. And that's exactly what our plan is to do, and I'll touch on that on the next slide. But really, in a nutshell, establishing partnerships in the pre-development phase to position ourselves both from a customer alignment standpoint, but also from a financing and technical standpoint, to be able to de-risk this project into construction in a number of years' time. So in summary, why look at Jindalee and why now? Like I mentioned, super strategic asset, one of the largest in the US. We're cheap on a relative basis, with a lot of leverage to a tightening lithium market. We're well capitalized with circa $4 million in the bank, Australian, I should say, to fund our 2025 work program ahead of us. And we have a number of catalysts in the pipeline as we outline. I spoke to partnerships before. We're very close to appointing some strategic advisors to help put some structure around existing conversations in that space, but also go out to a larger universe, and that'll kick off more meaningfully towards the end of this month. I mentioned the potential Department of Defence grant application. They're current, as part of the new administration, they're reviewing all grant applications at the moment. But certainly, like I said, our guidance is that the net result should be directionally positive for critical mineral projects like us, with more funding likely to get directed towards those as part of the administration's priorities. And then lastly, we're working on a key permitting milestone, our exploration plan of operations, where the lion's way through completing lion's share way through completing an environmental assessment through the NEPA process. That's largely complete now, and we expect to receive that around the middle of the year, and that'll really be the key to unlocking the next stage of work program at McDermott, being a large drill program to provide the metallurgical, provide the sample for met test work, and then the feasibility study more broadly. And the timing on some of those higher cost elements on the right hand side of the slide is really a function of the market and how we go, particularly on the partnership side of things. But we're gearing up to be able to execute on that as soon as possible. And with that, I'd hand it over to questions and thank everyone for their time.
Thanks a lot, Ian. So like Ian said, we can get started on the questions now. Just as a reminder to everyone, you can type your questions into the chat box at any time. So Ian, we have a couple of questions already. I guess, you talked about getting the story out there in North America. Would you contemplate a North American listing?
Yep, we've currently got we're on the OTCQX, but in terms of a more, a proper listing, whether it be the NYC, New York Stock Exchange or NASDAQ, that's on our to-do register, and so we're slowly working on that, but it's not likely to be particularly in a down market. It's not likely to be an immediate focus for us, but we're keeping a sort of a live tab on that when potentially the market opportunity opens up to be able to leverage access to more North American investors, who are the logical owners for this sort of project and this company.
Okay, can you touch on maybe community support and even state government support for the project?
Yep, good question. So we've been lucky to receive, we had good engagement with from the state side with the Oregon governor, as well as the senior federal politicians in terms of particularly the senators. For example, this Department of Energy agreement was assisted and supported from Senator Wyden's office, who's one of the senior federal senators, former chair of the Senate Finance Committee, very senior guy in the US Senate. So we've made inroads on that regards, and it's I guess if you drew a Venn diagram, between what this asset sits in the middle of a number of key priorities. There's a need for economic development. There's a need for these critical minerals and to decouple the supply chain with China. So we're seeing good buy-in from that. On the community side, we announced last year that we signed a couple of agreements with the local tribal group, or the tribal group located closest to the project, I should say, as a positive initial steps to building a relationship there. It's going to be a journey, but we're making progress on that. We've recently appointed a sort of ESG manager to manage the permitting and some of the other broadholder stakeholder engagement locally to build on that. We see this project needs to deliver value to a broad range of stakeholders for it to be a success, and that's how we're sort of trying to design the project. Okay,
thank you for that. I guess this is the final question. Any update on the MOU with POSCO?
No, so we did some test work with POSCO late last year, and that looked at both essentially running similar test work program to we did, so validating, I guess, our test work, but also other innovative ways on the processing. We received that we received that test work at the end of last year, and that really supported our it aligned closely with our results, which was meaningful. In terms of further engagement with POSCO, there's nothing really more underway at the moment. Clearly, they've done a lot of work on the project and know the project better than others, so they're well positioned in terms of any potential partnership, but there's no work underway, and there's no real other further update on that for the time being.
Okay, I think that's it for the questions, Ian. Thank you very much for taking time to host this webinar with us today.
No problems. Thanks for everyone taking time out of your day to listen to the Jindalee story. And by all means, please, my contact details are on this slide. I'm happy to answer any questions directly that you might have. But thanks again for joining.
Just as a reminder to our audience, our next webinar will feature BlackRock Silver, and that's tomorrow, March 19th at 2 p.m. Eastern. Thanks for tuning in with us, everyone. Have a great day.